Hello, you're watching Proactive. I'm joined by Eric Strand, the CEO of AUAG Funds. Eric, very good to see you again. And since we last spoke, gold and silver have held on to their gains. How do you view current market conditions and how would you expect precious metals like gold and silver to respond?
Well, I mean, we had some turmoil, big turmoil in the markets now with the yen carry trade unwinding. And of course, that happens because at last the Bank of Japan was raising rates. I mean, still 0.25%, so nothing to talk about, but the direction is important. And then the Fed with the numbers of employment numbers in the US, the recession is there. Maybe they have to lower rates faster, so the direction is the other way, making the yen carry trade unwinding, and it has had big impact on the markets. So things have happened, and gold did go down a little bit, but not very much. So it's very stable there.
I mean, given gold's safe haven status, would you have expected it to perform better than it has over the last couple of weeks?
Well, no, I wouldn't say so, because you should always remember that even weeks or years, when even if gold is minus, if the stock market is minus much more, it could be a good like a good year for gold, because you can buy more stocks for the gold you have. So it doesn't have to be always go up; it just have to go down less than the stock market. So the protection is there, and gold has had a good year this year. I mean, we were with a new all-time high already, and our target 2,475, we reached that. We're above that in July. It has come down, of course, a little bit. But in the end, what we'll see is that the rates will come down in the US. The Fed will lower rates, and there will be a strong momentum for gold to take the next step.
Maybe look at the dynamics for the gold market, Eric. New supply coming onto the market versus demand. How are you seeing that at the moment?
What we have seen is that the Asian buyers have been really strong, with China and India and buying a lot. The Western buyers have been really slow, but they have started to take up buying now, so that's very good. And then we have the central banks, and they have been big buyers with a record 2022 and almost as high as 2023. And what is interesting now, the first half year 2024 is the highest first half year ever. So maybe another record from the central banks in 2024. So with the Western buyers in the ETFs coming on the track, that would make also a good win for the gold price coming.
How about silver, Eric? Because the fundamentals for silver are slightly different due to industrial demand and, of course, growing usage for solar power.
Yeah, and silver has been really, really strong this year, stronger than gold. Of course, the correction now, when the market is so volatile, is higher. I mean, it's down 5-6% from the last week. But I think silver will catch up that really fast when the market stabilizes, and we see that again the Fed will have to lower rates. The problem is the Fed are maybe behind the curve, and they will have, as we thought already, they will have to lower rates because of the problems, and not just because they have a lower inflation environment. So and that can be bad for the stock market, and if it's bad for the stock market, that maybe will get money into the precious metals. So that could be another strong factor for the precious metals.
And Eric, yeah, your own ETFs, how have they performed in light of the gains we've seen in gold and silver this year?
Yeah, we have both the gold mining and we have the silver mining, and I would say the silver mining has been performing much better than the gold miners, and even much better than the commodities itself. So it has been a good year for the miners. I think it will become even much better because their margins, even with high prices, got lower because of the higher costs to mine. But now the difference, the margin expansion, would be dramatic with the high stable precious metal prices, and the costs are not going up anymore. So I think we will see very interesting results from the miners and returns for the stocks.
And you're still targeting gold to end the year at 2,475 or $2,500 an ounce, Eric?
I mean, we had that going into 2024, but now we have been even above it, and we see the big banks, commercial banks, have 2,500, 2,600. So it's a bit strange that we would have a lower number than they have. I mean, we are a little bit of a gold bug team, so probably we would have to raise that, and especially now when we have such a strong start of the year, and also have the rate cycle coming down. So I wouldn't surprise if we go much higher from here.
Well, let's see where it heads. We'll chat about that next time. Erik, thank you very much for your insights today.
Thank you very much.
That's Erik Strand, the CEO of AUAG Funds.